The last piece on First Word is again regarding mutual funds and what they have done. Now, top 3 mutual fund houses were net sellers in financial stocks last month. Part of the reason could be higher valuations or a shift in allocations or a mixture of both. Yash Upadhyaya is here to tell us what was bought and sold by the fund houses in the month of November. Now, Yash, we've already identified what each of the houses did a few days back. What is it we're trying to do here? We are trying to give an aggregate of the top 3?
Right. So for anyone who would have looked at the data individually for all of the top 3 funds, one thing that stands out is the fact that most of these, or in fact all of these fund houses, they have remained net sellers in financials in the month gone by. Now, we're not saying that this is happening for the first time. On and off in the previous 10 months, they have sold financials in between, but largely the trend has not been where they have remained. All 3 of them have been net sellers in financials. The trend has largely been negative for the likes of utilities, energy, metal, as well as the auto names. But financials is one space where they have regularly accumulated, and only once or twice in the previous 10 months they have managed to sell some amount of stake or trim their stake in financials. But last month we saw all 3 of them take out large quantities of their holding in some of the big banks, and that's the reason why this is one thing that stands out, which is actually different from what they've did previously in the year 2019. So having said that, let's take a look at what they've actually done in November, and I'll start first with HDFC Mutual Fund. And while look at the kind of sales that they've had in the month, they've sold almost 2.5 crore shares in ICICI Bank, 75 lakh shares in Allahabad Bank, 59 lakh shares in Arnam, as well as SBI about 26 lakh shares, versus only 17 lakh shares that were bought in Indian Bank in the previous one. So the quantum of sales is far higher as compared to the quantum of buys. Similar is the story when you move on to ICICI Prudential Mutual Fund as well. They've sold 1.76 crore shares in ICICI Bank and about 34 lakh shares in HDFC Bank. But they had some preference towards the smaller banks, so they added small quantities in Federal Bank as well as South Indian Bank, between 35 lakh shares and 24 lakh shares. So clearly there is that shift from larger banks to smaller banks that was seen here as far as ICICI Mutual Fund is concerned. And lastly, when it comes to SBI Mutual Fund, again, big selling seen in ICICI Bank. This was one name that has been consistent across all 3 of them and has been at the top of the list, in fact, for all 3 of them. 98 lakh shares gone there, along with Bandhan Bank, Axis Bank, as well as Aavas Financiers. All 3 of them seeing selling as well, but small quantities added in HDFC Bank and SBI Bank. So the quantum of sales has been far higher than the quantum of buys, and that's the reason why this is one thing that stands out from what they have historically done in 2019. One of the reasons for it could also be that most of these companies, they have run up substantially, and this is how the returns look like on a year-to-date basis. ICICI Bank, for one, is up almost 50% plus, as well as Axis Bank and SBI up anywhere between 20 as well as 12.5% in the same period. We spoke to a fund manager, and he seems to believe that it could also be down to the fact that the valuations too have run up substantially. And if you look at the price to book multiple for these companies versus their historical average, so we're taking the 5-year average over here, ICICI Bank at 3.1 times is quoting at a premium of over 60% to its 5-year average of 1.9 times. Similar is the case when it comes to the likes of SBI, Axis Bank, as well as Kotak Mahindra Bank, all of whom have run up substantially, and the valuations too are quoting at a premium to their historical average. This could just be one of the reasons. There could be several other reasons, and these mutual funds do not obviously disclose their strategy. It could be part of their tactical approach as well, but this is what stands out in the month of November as far as the top 3 funds are concerned.
Well, large sells on the financial side, but as we said, could well be just valuation comfort selling that would have come in. You never know when the buyback might happen as well. Yash, thanks so much for putting that into perspective. That's all that we have on First Word today.